My goal has always been to teach you the most mechanical strategies, and I've never really insisted that you need daily bias to be trading profitably. But if you can implement, daily bias and the order flow or the overall trend, you can basically increase your win rate. Now, you would normally get around 50% win rate without implementing the daily bias technique that I'm about to teach you in this video. But if you implement this method in whichever model you trade, so for example, in the last couple of days, I've uploaded my gold strategy, and it has been working phenomenally for a lot of people. Now, if you implement this technique that I'm about to teach you right now, your win rate can significantly go up, and you can trade this with any other pair or asset as well. Okay, so you might see this and might think that, okay, this is confusing, but don't worry. As usual, I'm gonna clarify everything and make it easier for you guys. So on the daily time frame, first of all, what you have to do is mark out the PD array. Now, what is a PD array? PD array is any high, it is any low, right? It could be a fair value gap, could be an auto block, could be a breaker block, could be an inverse fair value gap, could be a reaper, could be a BPR, whatever. All right, that is called PD array. So now on the daily time frame, suppose that this is where you are, right, on this day. Now on the next day, what you're doing is anticipating that price will go into the PD array, right? Now this is option one. The option two is that price is already inside the PD array, and then you're waiting for the next candle to open inside the PD array. Okay, so option one, let's suppose that this is where you're looking at, and this is the opening price of the next day, right? So on the next day, what you are basically looking for is a accumulation phase, and then you're looking for a manipulation phase into the PD array. Now I'm going to teach you a method to actually measure the manipulation move, right? So you would be able to successfully measure the correct manipulation move. So to do so, first of all, what we have to do is mark out the opening price of the next daily candle. So that is the opening price that I've marked out, right? So when you have marked out the opening price, you are simply going to the 15-minute time frame. So this is how the 15-minute chart is going to look like, all right? So on the 15-minute time frame, you are first of all looking for in the accumulation phase, you will see a manipulation as well. So over here, you can see we have accumulation, and then we have a tiny bit of manipulation. Don't worry about this, all right? All you're basically looking for in the manipulation leg is basically a higher high, higher low, and then a higher high, and then a market structure shift. Now, once you get the market structure shift, right? Once you get the market structure shift, you are using the standard deviation tool. So I want you to copy these settings, right? These are Fibonacci settings. So when you have a higher high, higher low, and higher high, you mark your fib from the last high that was formed to the last low, right, before market structure shift, and you will get these projections. So -2 and -2.5. Now that is from where price is going to distribute towards the upside. So what we are doing here is we are measuring the manipulation move first. So we have accumulation, and then we have the manipulation move, right? Now when we are not using this technique, we have no guarantee where the manipulation move is going to end, but we use this method to identify where the manipulation move is going to end. And in this case, it is the -2 and -2.5. Now pair it up with PD array. So you can see price tapped into the PD array. And on the 15-minute time frame, we also have the daily PD array and price tapped into it. Now, we will not be confirmed about our bias unless we get a market structure shift to the upside. So over here, you can see we got a market structure shift, right? Now, once you get the market structure shift, that is going to confirm that we are not going to distribute towards the upside. Now you might ask, how do we actually measure the distribution, right? Where is the distribution going to end? And it is very simple. All you have to do is use your fib from the last low that was formed to the last high that was formed before market structure shift, right? So this low and this high. And you can see we get a projection of -2 and -2.5. Now, this is where price can reverse from or it can retrace. Now, it is not always going to reverse from this level, right? There is no guarantee, but this is from where price mostly reverses, right? Or it can pull back and then push back up again, right? So when you get a market structure shift, right, your bias is going to be bullish until this level is hit right here. Now, this by itself is an entire model as well. Now, here is option 2, where the price is already inside the PD array. So let's assume that this candle right here has always been in the PD array. Now, we're going to wait for the next candle to open, right? So now, when the next candle opens here, right, what you are anticipating is the similar move, right? And basically, it's going to look something like this. Yeah, perfect. It's going to look something like this. So let me just do this. You're going to get the manipulation to the downside, and then you're going to have a distribution to the upside. So this PD array is going to look something like this on the 15-minute time frame. So the next day, what you have to do is simply mark out the opening price, right? While price is already inside the PD array, the daily PD array. This could be an auto block, could be a fair value gap, could be a breaker block, right? Could be a high and low that is swept. Now, once you have your price in the PD array, you look for the same setup, right? So this is how it's going to look like. We're going to have accumulation, and then we're going to have manipulation. This wick is the manipulation, but to measure the manipulation move, where it's going to end, we use the standard deviation projection. So from this high to this low, we're going to use our standard deviation tool, right? And -2 and -2.5 is from where price is going to reverse and give you the distribution phase, right? So this wick can be measured accurately with this method. Now, similarly, you would look for a market structure shift. And then on the 15-minute time frame, what you can basically do is you can look for your, trading model, whatever you trade, right? You can basically trade the ABC, a turtle soup, right, to the upside. You can basically take long from the fair value gap that forms. Now, just because your bias is correct doesn't mean that you're going to lose a trade, right? So the best entry is going to be the first and the second one. So basically your entry could be somewhere around here from this fair value gap on the 15-minute time frame. Now, what you can do is to confirm it even further is you can basically just wait for price to come into the 15-minute PD array, then look for a 1-minute confirmation and take your entry. Now, the second entry would be after you get a market structure shift, you get another break of structure, right? And while your standard deviation projections are still intact, so from this low to this high, you can basically take another trade from this PD array and target this level over here. Now, talking about the gold strategy, well, if you get, this setup before the 8 p.m. So if you are familiar with the gold system, we always look for a purge on the recent low or recent high that is formed before 8 p.m. Now, if this type of pattern occurs before that, right, and you get a purge at 8 p.m. like this, the manipulation purge, right, we have accumulation, then we have manipulation inside the PD array, right? You get the feel what I'm saying, right? You must understand. If you have watched the gold strategy, you will understand what I'm saying right now. Now, similarly, you would do the same if you're looking to short, right? So price is already inside the PD array, or you are waiting for price to manipulate inside the PD array, right? So if it's already in the PD array, you look for accumulation, right? Manipulation and then distribution. We measure the manipulation move by using, if you have the accumulation inside the accumulation phase, look for the a lower low, lower high, lower low, and then a market structure shift. So inside the accumulation phase, we get a market structure shift, right? So to confirm, to measure the manipulation move now, accumulation, manipulation, distribution, we use our standard deviation tool, right? From the last low that was formed to the last high that was formed before the market structure shift. Right now, you do not want to be trading this, because sometimes what can happen is price will give you a market structure shift over here, but then price can simply reverse and then give you another market structure shift, and then you have to measure the standard deviation from this low to this high. Now, by now, I hope that is clear, right? Let me give you guys some examples, and then we will end the video. Okay, guys, so here is example 1, and you can see I'm looking at NAS 100, and just around here we have the fair value gap, right? So this is a PD array, so keep this in mind, right? So I'm just gonna mark this out like this. I'm just gonna give it a color, um, you know, this, and that's it. So this is a fair value gap. Now, this is going to be the opening price of the next day. So if you look at this, we opened actually just around here. Sorry. Yeah. And then we manipulated to the downside. We mitigated this fair value gap, right? So let's study what happened here on this candle. So we have the opening price, right? Now let's drop down to 15-minute time frame. So if I zoom in a bit, zoom out a bit, you can see that this right here is the opening price. And we are anticipating that price is going to tap into the daily PD array. So now we are going to measure the manipulation move first, right? So look at it here, right? We have first of all, we got a market structure shift here. So if I use my fib from this, actually we got the first one just around here, the tiny bit, right? Now we want to use our Fibonacci from the last high to the last low. And you can clearly see price didn't come into the -2 and -2.5, and we also didn't reach the PD array. Now, we got another purge of the liquidity, and then we have a higher high, higher low, higher high, and then we finally get a market structure shift over here. Now we can use our fib to measure the manipulation move. And you can see the precision over here. We tapped into the -2 and -2.5 level, and we also mitigated the daily fair value gap. Now our manipulation phase is over. So now to confirm our bias, all we're now looking for is another market structure shift, right? So this right here is when we get a shift in the structure. Now this is not a clean shift in the structure because we have a wick, but I still would consider it. However, over here we have a body closure, and then you can see that how price just kept going up, right? So this could be your first entry from this auto block, right? And you can then basically keep taking your entry. So for example, body closed above here, tapped into this auto block, boom, right there. Price came back, retested this level, and then you can see that price just kept going up for the rest of the day. And then the new day starts, and you can anticipate the next day distribution with the same technique and the same method. Let's move on to the next example. All right, guys, so here is another example, and you can see I'm looking at NAS 100 on the daily. So we have the PD array marked out. This is a fair value gap. And over here, I'm waiting for the next day to open, and I'm anticipating that price will tap into this fair value gap. Now, on the next day, you can see that the candle opened, we manipulated to the downside, hit the PD array, and then we distributed to the upside. Now, let's study what happened, right? So let me just go to the daily time frame first. And let me just mark out the opening price. So this is the opening price over here. Now I'm just going to go to the 15-minute time frame. Right, and you can see that we have the open, right? Then we pushed up, and then we had a shift in the market structure somewhere around here. So we have a higher high, higher low, higher high, shift in the structure. Now we can measure the manipulation move, right? So using our fib from the last high that was formed to the last low before the market structure shift, and then you can basically see that price tapped into the PD array. It tapped into the -2 and -2.5%. And then afterwards, what do we have? We have a shift in the market structure. So we get our bias in the New York session, right? And then when we get the market structure shift, we have this auto block, right? And price tapped into it, and look at this beautiful delivery to the upside. And we kept going up for the rest of the day. So this is the beauty of this strategy. This is the beauty of this daily bias method. You can basically take entries on the lower time frame as well. You can also see that we tapped into this fair value gap while our bias was bullish. And if we use our standard deviation tool to measure the distribution phase, what we can do is simply just use the last low that was formed to the last high that was formed before market structure shift, and you can see price distributed perfectly to the -2 and -2 and -2.5 zone. So this is the accuracy that I want to teach you guys. Now, moving on to the next example, I want to tell you guys one thing. If you are interested in my mentorship, the new mentorship is going on currently in the Discord server. There are new educational videos, but if you purchase, enroll into my old course right now, you will get access to my new course, the new mentorship, for absolutely free, right? But if you fail to enroll into my old course right now, then you will not be able to access the new course for free. It will be priced at a different value. But here's an opportunity, right? You guys have an opportunity. If you really want to do it, then just get enrolled into my old course. You get Discord, where I share market analysis. There is a beautiful community that shares trade with each other. But it is not necessary. What I'm teaching you right now is all you need. All right, trust me. So this is beautiful. Let's move on to the last example now. Alrighty guys, so here is the final example, looking at USD CAD now. So we have this fair value gap, and now I'm anticipating that the next day is going to manipulate into this fair value gap. So you can see that we first manipulated into this fair value gap, and then we distribute it to the upside. So now let's study this candle. So what I'm going to do is I'm going to mark out the opening price, which is this. So now I'm going to go to the 15-minute time frame. Now you can trade, you go to the 5-minute time frame as well, but there will be much more noise, and I do not recommend it. Now, the very first thing that's going to happen is we're going to manipulate into the PD area, right? So to measure the manipulation move, right, we have to look for the market structure shift, right? That is gonna, then afterwards we'll be able to measure the manipulation move, right? So this is the opening price, and you can see, first of all, we get a market structure shift here. Now, even if price reached this level, the -2, -2.5, I would not look for shorts. Why? Because our objective, our PD array is here, and the anticipation is that price will go into this PD array. So we want to see price manipulate into this PD array. So over here, what we do is we get another market structure shift, right? So now we can use our fib from the last high to the last low that was formed before the market structure shift. And you can see once again how beautifully price tapped into the -2 and -2.5 zone. Price can go below it as well, but not somewhere around here, right? It should not completely violate the PD array. So you can see that this is the manipulation leg. So we have accumulation, right? Accumulation here, manipulation here. We swept all the liquidity. We tapped into the fair value gap, the daily fair value gap. And then we get a shift in the market structure, right? So let me just remove this now. And you can also see we get this fair value gap. So a beautiful entry here using our distribution levels. To measure the distribution, we use from the last low to the last high that was formed before market structure shift. Price tapped into the fair value gap, and we take our profits somewhere around here. So once again, you can see we have accumulation, manipulation, and then distribution. So that is the entire technique, guys, to find your daily bias. You can trade it as a separate model. Of course, this is going to require some practicing and back testing, but trust me, if you implement this into your system, into your trading strategies, then you're going to thank me forever, actually. Okay, thank you so much for watching.